Hello Bitcoin plebs and bulls, welcome to another FU Money. This time it's Wednesday, the middle of the week, and another intra-week video for Bitcoin markets. So let's make it quick. It's a quickie today, you know the drill already. Intra-week videos are very quick, so let's go. I just wanna tell you guys again about the website. We just opened the website for the channels. So if you want to visit our new website, of course, this is a work in progress all the time, so it will get bigger. But for now, it's still growing, let's say. But you can already have some functions there and contact me and watch the channels also on the website itself. So there are a few things and also other information about the channels that you probably don't know, like checking them on Rumble, or the link to Apple Podcasts where you can listen to the Portuguese channel also on the go, just the audio. But anyway, this is the new website, so visit, leave your comments if you want to on the Telegram group, of course. Let me just put here the Telegram group so you guys know. So on top you have the Twitter accounts, my personal one, in the middle the channel's Twitter account, and last link is the Telegram group that you should join and join the 650 people that make our community on Telegram discussing Bitcoin and other markets in general 24 hours a day. But you can leave us a comment there about the website or what you would like to see there. But if you want to visit the website, it's simple, fumoneypod.com. That's it, fumoneypod.com. The link is down below on the comments of the video. So that's it, guys. Let's go to the charts. And before the charts, let's go to the numbers, of course. So here and here, the numbers. So let me put this in full screen. So Bitcoin is now at 47,000, refreshing the page, $47,601 with $9.83 billion traded in the spot market in the previous 24 hours. Ethereum is 3,765 now dollars with only $5.4 billion traded in spot markets in the last 24 hours. So for Bitcoin, this is minus 0.6%. For Ethereum, this is minus 0.63%. So these are the numbers. You guys know already the drill. I don't like the other one, so I don't care. Let's go and check the markets on the charts. Okay, let's start. Yeah, the total. We can start here, no worries. So the total continues to be inside the plotted rectangle that I have plotted some time ago, which was the worst case scenario for continuing at the A scenario, which means that the A scenario means that we will not leave the triangle that we will see in the next chart, and we will continue reversing the price action to the upside. Now, I believe that this must be the start of another 5 waves of the final 5th wave of this Elliott wave count. You guys know this already. So the let me take this sticker off for now because it's a bit confusing for you guys and for me also to check the charts with that thing just going around there. So you guys know already that the Elliott wave count I've plotted long time ago. Since July I've been talking about this. Wave 1, corrective wave 2, wave 3, corrective wave 4, and now wave 5, which could take us close to the number on your screens on orange, in orange, which is $3.65 trillion for the total market cap, surpassing the all-time high around $3 trillion that we had in November. So I believe that we are now starting wave 5, and this is probably a corrective wave 2 inside the wave 5. So this will start like 1, corrective wave 2, wave 3, corrective wave 4, and wave 5, which could take us close to that target over there, which is the target for the cup and handle. So you guys know that already. I've been discussing this for a long time. Also, I upgraded the Pro framework and the Pro momentum. You guys can see also this is a bit different because Phil released version 5.0 of this Pro framework, which includes the Pro framework indicator itself, which is the one plotting the resistances and supports, trend channel, and all the things you see here, except some lines which I plotted myself. And the Pro Momentum also version 5.0, which is this indicator here at the bottom, which shows the momentum of the price action and also the bulls, bears, and the context sine wave, which is the gray line. Probably you cannot see it so well, but if I zoom a bit, you can see the context sine wave, which is this gray line here, which is already oversold. So we might be on the verge of seeing a reversal of this wave 2 starting to go up. And we, of course, will have to wait and see the developments during this week and coming week for sure to see how this evolves here. But I am still bullish in this moment, considering that I consider that we will continue to go up because we did not even come close to the bottom of this retracement here, the C wave of the corrective wave 4. So right now, I believe that we will continue to go up, and this is just wave 2 probably of 5 waves that are contained in the last 5th wave of this big count here. Okay, so that's it. The momentum is coming a bit down. There's a bit of divergence, but the bulls continue in control. You guys can see here that since the 21st of December, there is no control by the bears. There is control by the bulls, which is coming up here, the green circles on top of each other, and of course the bears are the red circles on top of each other. So we did not even have a squeeze here, because for that to happen, you need both lines to keep joining almost to the center, and then that is a squeeze. So right now the bulls are still in control of the total market cap here. So that means all the coins in this crypto market. And I believe that we will not break this line of support here around 2 trillion. So let's see how that goes. If this continues to be like that and we retrace again to the upside, we will have for sure a beginning of a wave 3 of the last 5th wave. So let's take a look at dominance, and I would like to discuss here something that I saw today, contribution from Paulo Traça today on Telegram group, and he plotted on the 4-hour chart here at the dominance, he plotted a wedge, a descending wedge, which you guys know already. In my opinion, I don't look at charts with such lower time frames, but in any case, let's just plot the wedge that he plotted, and I would like to show it to you guys. So it's something like the 13th of December, so it's from this top here to here, touching all those points over there. Let me not just make it so long, let me make it like this, and the other one was something like that. So there is a descending wedge for sure here, but this is a 4-hour chart, so you guys know already. I don't really like such shorter time frames, but this, at least for the short term, it might indicate, and kudos or sats to Paulo Traça here, this might indicate that the Bitcoin dominance is about to break out of this descending wedge and starting a new movement to the upside. In any case, so this is my warning, my personal warning about this is just I don't really like time frames, such short time frames, because it's not so relevant in the big schema of things. I prefer to analyze monthly, daily, weekly and daily charts, which have much more relevant moves and can indicate more prominent moves of Bitcoin and other stuff that you see on the charts. So just getting back to the previous one, so you can see how small that is when you go to the weekly chart. It's really small, you cannot even see it, but in any case it might trigger a short-term breakout to the upside of Bitcoin dominance, which means that we could also think about this together with the rest of the charts. And we will start with the weekly chart here for Bitcoin, and we are still inside the triangle, and look how perfect that was. Another touch on the bottom of the triangle, and you will see that on the daily chart. But the pattern that I've discussed before continues to be valid. So we are trying, let me just try to see if I can move this. Probably it will be hard. Yeah, not easy. So let's remove that from there. I will try to make a new one. And this is the, let me show here. I will do it like this. No, it's impossible like that. Well, okay, like this. It's much easier. So this is what I've been talking about Here, let me just make this a bit smaller so I can see it on the other chart. So this is the pattern that I've been discussing. It's still ongoing. It's still ongoing, and let me put this a bit bigger, and this starts around there, almost the same place, and this one comes a bit here. So it might be a bit more extended in time. But this pattern inside this circle is replicating what happened here. So you guys can see that we started to go up at this point. We kissed this 70% line of the RSI, then a big crash, which corresponds to that candle over there. So the same here, going up, kissing the 70% line of the RSI, big crash over here, which corresponds to 3 weeks instead of 1, and then accumulation sideways before slowly and gradually going to the upside and crossing the 70% line exactly at the point where we started this parabolic move to the upside. So I'm still looking if this pattern will replicate this pattern and see if after some sideways accumulation, as I've been saying already in some videos in the past, we start to go up, and at some point in time, probably around this yellow circle here, the smaller one, we will trigger the next parabolic move, probably the continuation of wave 5 to the last targets that we have. So let's see if that continues, but this was just a remark. I just wanted to tell you guys that we are still inside the triangle, everything is still valid. The touches of the bottom of the triangle have been really on the spot, and I will show you that on the daily chart. Let me just record that, and we can go to the daily chart here. Also, before I forget, I almost forgot, look at how the oscillators are now getting at the point where usually they start to turn back up. So the oscillators on the weekly chart are very extended already. We have been going down for a few weeks, and now we are at the point where usually you see the reversal of the oscillators to the upside, and you start to see some green bars on the third oscillator here, and you will start to see light red bars on the MACD with a blue line starting to go sideways. So this might indicate that we are close to see some reversal, and together with that Bitcoin dominance chart that I just showed on the 4 hours with the descending wedge, all things thought together might be indicating that we might see a reversal soon. But let's go to the daily chart, as I wanted to show you guys, and here it is. Look at the touches of the bottom of the triangle. So this was already spoken about in previous videos. When we came back down, starting to go sideways, touched the bottom of the triangle. We never closed any candle below the bottom of the triangle. Then we broke out of the descending channel, started to go up. Now we came back down again, retesting the bottom of the triangle, and that is absolute perfection. If you can see it here, it's perfect. Perfection. Here it touched the bottom of the triangle and now reversed, and it's trying to go to the upside again. So I'm not saying that we are not going to break the triangle and that we might even go to scenario B, which is retesting the 40,000 level, but at least we can see that the triangle is working, and the plotting of this triangle was on spot several weeks ago, and now we are testing the bottom of the triangle for a possible reversal of the price action to the upside. And of course, this drop we have here coincides a bit just the next day with the crossing of this death cross here, which I don't really believe in. But in any case, it's something to take into account when you have such a big drop. But in any case, we have a green doji forming here, a hammer, almost a hammer forming here. And probably this will be, again, another spot for price reversal to the upside. Let's see how that continues. We need to break above, of course, the 20-period SMA on the daily chart, which is the green line you guys see here. So, all things considered, I just wanted to show you this. So, it continues to tell me that while we are still inside the triangle, this is still, everything is okay for scenario A, which might be reversal after retesting the bottom of the triangle and going to the upside, breaking out of the triangle and probably achieving new all-time highs next year. So that's what I'm expecting to happen in the best case scenario, which is scenario A. For those that never seen my videos before, I considered in previous videos scenario B, which is the breakout of this triangle to the downside and retest of the support lines around 39K and 40K, and scenario C, which is the worst one, of course, if we go to retest the $40,000 line of support and we break it to the downside, we might be in for another retest of the 30K level, which is the absolute last support we have before total meltdown, which I would not like to happen. Of course, no one does, but for now we are still in scenario A. Everything is still validated. The breakout of the descending channel, the support of the bottom of the triangle, or everything's considered. This is still scenario A and it's still in play. So no reason for alarm, and my probabilities are still in play. Also, the biggest probability is that we will reverse this price action to the upside and not break the triangle unless some black swan event occurs. Also, I would like to point out that the current candle, the current daily candle, is an extension B to the upside, a buy extension B, so that is also helping the price action to support here and probably reverse. So we will have to wait till the end of the day, see how this candle closes. I would love to close it as a green hammer and continuation to the upside tomorrow with a new candle going up, breaking above the 20-period SMA and probably finding some resistance again at the same levels as before, around $51,900. So let's see how that goes. Just very, very, very quickly, the dollar is going down, so we have a sell signal on the dollar. This is the weekly chart, and the dollar finally was stopped after several weeks of attempting to go above the 96.7 on the Dixie. The dollar is now coming down. So for you guys thinking about this, or in the Forex trading market, the dollar is showing some signs of weakness right now, and probably we will see a bigger move to the downside, probably to find support on the 200 SMA, the purple line here, that is just now trying to turn back up. So let's see how the dollar behaves here. Gold is still fighting to get away from this point of convergence of these moving averages. We have all of them almost together. Only the 200 is still going up. All the others, the 20, the 50, and the 100 periods, SMAs, are all converging at the same point right now. And gold finally is in a doji candle for this week above that point of convergence. So let's see how that goes. But it's still a big fight for gold to try to get away from those moving averages. S&P is still making new all-time highs this week. So we have been higher than this price right now, but the highest one was $4,807, and we are now at $4,783. So it's not a big difference, but we are still making new all-time highs here. And the last one, I just wanted to show this before ending this video, wrapping up. So this is a pattern I was working on last night. I discussed it on the Telegram group, and curiously, I had just a few answers, probably because people don't really like this scenario, but I'm not saying this is going to happen. I just want to share it with you. This is just one of the ideas of what might be coming or not in my probabilities. We are still in scenario A, reversal inside the triangle I just showed you, the ascending triangle on the green, and breakout soon next year to new all-time highs. But we have to consider this fractal. So I just want to show it to you guys. I've been showing this for 1 or 2 weeks already. 2 weeks. I started on Hard for Cafe one Saturday. It will be 2 weeks next Saturday, I guess. But I started also on my channel here showing this fractal, but now the evidence is really big. So we have a very similar pattern here developing on this square. So what I'm trying to say is this fractal is almost duplicating the same behavior of the price action, the price structure on the first square in green, and we almost have the same here on the second square. So if that happens, I just copied this price structure to here, which is the gray line on your screen. So right now we are here on the tip of this cursor, and the rest is what could also happen if we actually replicate the same behavior we had here on this Wyckoff accumulation pattern. So we might be into the spring of the Wyckoff accumulation, and then another move down to exhaust completely the bears, and then reversal to the upside. If this happens, however, I would say that we could be testing scenario B, which, by the way, it's a very big coincidence that replicating this pattern on the second fractal, it goes exactly to retest the $40,000 line of support, and that is of course scenario B. So we would have to break out of the triangle in scenario A to go for scenario B, and then finding support around $40,000 before reversing the price to the upside. So I just wanted to leave you guys here with this idea of this fractal. Of course, I'm not saying that this one is going to happen. For now, I still believe that the scenario A, which is reversal at the point where we are now and going back to the upside inside the triangle, is still the one in play. But if we break out of the ascending triangle, the one here that I just showed you guys, so let me put it on the weekly again. If we break out of this ascending triangle here, the green ascending triangle, we might be in to retest the $40,000 level, which is the previous swing low before the all-time high. So that's it for today. These are the ideas I have for you guys. I really appreciate you being here today. I just wanted to leave you with the analysis of the charts and also the possibility of a replication of this fractal. Now it's up to you guys to use your own heads, decide what to do, and of course protect your positions in the markets. So I really hope that I helped you guys to understand the markets a bit better today just by watching this video. And if that is the case, please leave us a like and subscribe to the channel if you enjoy the content. And of course, don't forget to, let me put it here back on screen, visit our website, and also don't forget to follow me on Twitter. It's the first link on top. The second one is the channel's Twitter account. And the third one, also very important, join the Telegram group and talk directly to us. There's more than 650 people already discussing Bitcoin and the markets in general. So I would really like to have you guys there and be able to discuss it directly with you. Of course, I also publish some posts there when I'm not doing any videos. You know, short-term analysis or some quick analysis I sometimes do at night. And then I publish there and discuss it with other people. So join us and let's grow the community. And now I will, of course, leave you guys with the words of wisdom before we wrap up for today.
All right, let's roll. Hey, let's be careful out there.
Exactly, guys. Let's roll and let's be really careful out there in the markets. And I will see you in the next one. Till then, bye-bye.